Yeah, your background is good. I I take it off my video now just so I don't go live with you guys.
Mhm.
Right.
We are live on.
Yes, the show is yours now, Kimar. Go ahead.
Yes. Good night, everyone. Good night. Good night. Thank you for tuning in to the Debrief TV shows, finance and business segment. This is our first episode. Very interesting episode as well. Very esteemed and honorable panel. So I just want to take a second to share the link. I am going to, just take 1 second to share that link so we get a very engaged audience. So just give us 1 second so we can share the link.
Kimar,
Uh,
I'll control sharing all the links on Facebook, so you can just share within the panel, and I'll share it on Facebook.
all right, no problem. Um, yeah. So again, good evening to everyone. Um, we were on this Tuesday for our regular segment, and this, as I said, Thursdays will be our new day, specifically as it relates to finance and business. So just to introduce the panel this evening and shout out our sponsors, which will be the Debrief TV show and Stuart and Perkins Caribbean for being able to make this possible this evening. First, I'd like to introduce Mr. Professor Avinash Prasad. He is the chairman of the CARICOM Commission on the Economy. He's no stranger to us in Barbados. He has been on the landscape for a while, contributing in the areas of finance and public policy. And just want to welcome you, sir.
Thank you. Good evening.
Yes. I want to welcome next our most international guest, who is Shane Lowe. Shane is known to us as an economist who was the past president of the Barbados Economic Society, and he has been giving his perspective on economics and finance in the public space, and he is now working at the International Finance Corporation. But just to issue a disclaimer, he will not be speaking on behalf of the corporation, but on behalf of Shane. But we're still very glad to have him. So welcome, Shane.
Thanks very much, Kemar.
Yes. Um, we have Kevin Lashley. Kevin is the president of the United Enterprise Cooperative Credit Union Limited, which is a local credit union in Barbados. So I would want to welcome Kevin and thank you, Kevin, for agreeing to be on this evening.
Thank you too, Kemar.
Yes. And last but certainly not least, but most honorable, the only female among us gentlemen, Nisha Cave. Nisha is a compliance officer in the country of Nevis for the Nevis Credit Union. Nisha, thank you. As a female economist, I am very happy because economics is not an area where we find that many females. So I'm very happy to have you here, Nisha. Thank you for being on.
Thank you for having me.
Yes. So like I said, as we continue to get the message out there, we are live on Facebook. And just to get I forgot. For those who don't know my name, I am Kemar Stuart. I am the Director of Business, Finance, and Investment at Stuart Perkins, and many of you may know me from giving my contributions as well in the public space on economics and finance issues in the local media. So welcome to myself.
Can I just say, Kumar, that we are at this particular juncture. We have the first female U.S. Treasury Secretary, Janet Yellen, the head of the IMF, Managing Director, is Kristalina Georgievna, and the head of the European Central Bank is Christine Lagarde. So I think economics is becoming much more balanced than it used to be. And let's hope it keeps on going that way.
Yes. Well, I just want to be a little prophetic. Hopefully, Nisha could become, our female governor, the bank of the central bank, governor of the central bank sometime soon. So, Nisha, just speaking that into your life.
Yes, and of course, Marion Williams was our first female governor of the central bank. Did a fantastic job and has helped to blaze and pioneer movements in that direction.
Yes. So, as I said, Nisha, you have great encouragement. So, just to start off the show, Professor, like I said, you are the chairman of the CARICOM Commission on the Economy. We are in COVID. We are having economic issues throughout the region. Economies decimated, finances drying up. We're looking at new innovative ways to drag ourselves out of this what you call conundrum in the COVID-19 pandemic. You compiled a report on the economy. It's called 9.58. I take in reference that 9.58 is Usain Bolt, the fastest man in the world. So I'm very happy that you would have, named it that after a Caribbean man. So I'm very proud of that. But what is really this CARICOM report on the economy? What is your look? What would have caused the Prime Minister of Jamaica, Mr. Andrew Holness, to say, let us look at the Avanash Prasad report on the Caribbean economy. So could you give us your take on that? And just before you go, I just want to say that we are streaming live on VC3 TV in St. Vincent. So I just wanted to acknowledge that and to acknowledge all the viewers. The numbers are growing. It's looking good. So Professor, over to you.
And of course, we all here outside of St. Vincent feel together and stand together with our brothers and sisters going through the volcanic eruption and dealing with all the challenges. We in Barbados were covered in ash for a few days and had a modest sense of the challenge and the difficulty that they must be facing. So we're thinking of you all there. This is a very challenging time, even before the volcano, COVID, even before COVID, our region had become the slowest growing region in the world, the most highly indebted region in the world, the region with the most expensive transport of people and goods of any region in the world. And so we were stuck, to be frank. And the CARICOM heads of government established the commission with a new remit to look at ways of reinventing the economic development model for the Caribbean. And so the commissioners met for the last 2 years, and we came up with a report. We came up with an addendum to report because we were almost finished. The ink was almost dry as COVID hit. And I think that was really good for us because it made us rethink things. COVID, when you're stuck at home and you can't go anywhere, you start reflecting on what's really important. You start doing things that you would never imagine you could do, and you find you can do it. A lot of our jobs we thought had to be done face to face. The culture before COVID was that, oh yes, you could do a video conference call, but you're missing something, not being face to face with someone. And yes, you are missing something, but we found we could do a lot more things remotely than we ever imagined. So why have we become the slowest growing region in the world? Because we were actually the fastest in the 1960s to the 1980s, in that independence period. The Caribbean was one of the fastest growing regions in the world. So what happened? It's partly the rest of the world caught up. The rest of the world became more stable, more democratic, and they began moving ahead. It's partly because our revolution was based on big public investment in education And actually, and education is a key part of the culture of the Caribbean, investing in education. Now, all of us may not remember it was Sir Arthur Lewis who said it, but most of us think in what he said, which was that the fundamental cure for poverty is not money, is knowledge. And I think most Caribbean people believe that's true. But we've found that putting more money into the same educational system has what economists call diminishing returns. We need to be forever modernizing and rethinking what is education. You know, most education actually happens by people in work, doing. You learn by doing. Vocational education, very important. Education is being revolutionized by digitization. So we are perhaps falling behind by sticking to that successful model and not moving it on. And mobility has become very, very difficult. So let me try and wrap up and very briefly say that the Commission is focusing on improving mobility, so mobility of people. As you know, we have the CARICOM School National Regime, and we want to make that much easier, much lower barriers. Anyone with 2 CXCs, the 2 CXCs could be information that's automatically in your passport. You don't need to run around for weeks and months going to different ministries and officials to get your certificates. It's in your machine readable passport. As they swipe it through, they can see that you have the qualifications to be a CARICOM resident across the CARICOM region. We need greater mobility of goods. We need more efficient ports, but we also need a fast ferry system, which can carry large containers of goods. We basically have a weekly container system in the Caribbean. How can you import and export fresh vegetables if the container comes once a week? How can you have regional markets if containers are coming once a week and they're very expensive? And so we need a fast ferry network across the Caribbean. We need mobility of data. We need a single low data roaming charge. We need to have mutual recognition of professional skills that are sold digitally down online systems. We need to have a regional anti-money laundering authority. So you don't need to go through AML several times. So just if someone comes to Barbados and tries to start a credit union, right, they'll first have to go to the corporate affairs office, and they'll take several weeks, and they will charge you some money to put your name through World Check and Safety Net to check you've not been involved in any money laundering. And then you go to your bank to establish your bank accounts and your banking, and they'll put your name through World Check and Safety Net to check you're not being involved in any money laundering. And then you come to the FSC, which I chair, to be regulated, and we'll put your name through World Check and Safety Net to check you're not doing any money laundering. This money laundering process is very important, but it's actually debilitating business and doing business in the Caribbean. So a single money laundering authority. And let me end by saying a bunch of economists on the CARICOM Commission decided that the most important thing in all of this was actually not economics. And all the things that I've mentioned to you are all the things that do not cost any money. Because we spent a long time thinking about why is it? For decades, Caribbean people have been coming up with solutions and nothing has happened. None of these reports have been followed. And we decided there were two things. The first problem was unanimity. CARICOM requires all 15 states to agree. And secondly, one of the reasons why there isn't unanimity is that most of the issues and things cost money. It's very hard to get unanimity on anything, but anything which involves you spending some money and me spending some money, and I think you're spending more or less than I am, creates tremendous problems. And so we came up, the biggest recommendation of the CARICOM Commission, and my final point, is we call it enhanced cooperation. We're recommending that only a minimum of 5 countries, if they agree to move ahead on something, to move ahead on greater mobility of labor, easier movement in ports and easier movement of goods, they can move ahead as long as the other 10 do not are happy for them to move ahead and it does not cause them any active harm. So we may have a variable speed in CARICOM with certain countries moving ahead on certain issues. And why do we need to do that? There are dozens of initiatives that are stuck in CARICOM, not because there's no political will anywhere in the region, but because 12 countries have agreed to it, but not 15. Or 14 countries have agreed to it, but not 15. And so the enhanced cooperation mechanism will unstick CARICOM, allow us to move ahead on things the majority of us agree on, as long as the others don't object and that they can come and join us later. So it's that institutional change that's vital for CARICOM and the Caribbean economy to move ahead. Let me stop there. I think you're on mute, Kemar.
Yes, thank you, Professor, for that very thought-provoking introduction. Just again, thank everyone for tuning in. We enjoyed. I see you and Jeremy Bedford as well, who is one of our hosts on the other show. Professor, you would have said some things there, and I took some notes from what you said. What was outstanding for me is that you spoke about education and investment in education. Right now, Barbados education is one of the largest budgets as it relates to the allocation in the estimates of Barbados from the public finances. But in the modern day era, Professor, where things are becoming more expensive, and we are on an IMF program as it relates to what we call fiscal consolidation, and which simply means that we need to roll back the amount of social services that we provide.
Kemar, I'm not here to defend the Barbados government. I'm here to talk about the Caribbean. But let me say, it's a very important point you make, that there has been no cut in the education budget. The education budget is actually expanded.
Okay, I understand, but I'm not seeking for you to defend, but I'm just putting some context to what you're saying. It's like I said, these are factors that arise when the conversation starts. So you made the point about implementation. So we need to look at these factors when these type of conversations come up, and the question needs to be raised. Are these things practical in its implementation? You made the point about these things being stuck in CARICOM. So I am looking at things like our political system, our legal systems, and the ability to get these things done. You also made the point about collective action, and it only takes about 5 countries to agree to these new plans that you're bringing on stream. But I am looking at it from the legal point of view, in that I know for a fact that we, and I say we, I mean Caribbean governments, it's fine, we agree on stuff, but when we go back home to our respective countries, we seem to just shelf them and throw them out the window, right? And so if we take like let's just take LIAT, for example. We're having challenges with LIAT as well. So I mean, Professor, just give us some hope, give us some hope that these things can come true, because there's some very good ideas, but I'm worried about the implementation of them.
You know, I was sent off to Antigua to try and help in the referendum on the Caribbean Court of Justice, because that's our mechanism for enforcing CARICOM rules and agreements and treaties. And I was able to say to people that I've been personally taken to the Caribbean Court of Justice with 2 bits of work I was doing. Twice I lost, and I'm a big believer in the Caribbean Court of Justice, because justice delayed is justice denied. The Caribbean Court has inexpensive and fast justice, and that's our mechanism for enforcing those treaties. Barbados has been taken to the Caribbean Court of Justice twice. We've lost twice, and we are still adamantly defending it and investing in it and spending money in it, because we believe that that's the right thing to do. I think I was having a debate with a German political scientist today about how important is the Caribbean Court of Justice as an enforcer CARICOM rules. And I think it's important because if a country starts to say they're not going to agree to an international court's jurisdiction, people begin to question your willingness to agree to anything. And you really lose a lot of credibility. And I think small states can't really do that. I think if we were in the United States of America, we might decide to ignore an international court. But I think small states are so dependent on international relations that the Caribbean Court of Justice is an effective enforcer of CARICOM treaties. Not watertight, not 100%, but it is a good enforcer of those things.
Yes. Well, I take your point. It's very important. But like I said, I think all Caribbean countries should sign on to the Caribbean Court of Justice. It's high time. We should no longer have a situation existing where we have countries going to the Privy Council, where we have a solid independent institution like the CCJ, which is definitely, in my opinion, very effective. So with that being said, Shane, I want to divert over to you. You can give your thoughts on anything that Professor Prasad has said, but with you having some banking experience, I wanted to ask you, what is your outlook for banks and banking in the Caribbean, banking in the region? We had a situation where COVID hit. People are unable to pay mortgages. People are unable to afford paying back loans. You've had banks over the years saying, well, hey, profitability is decreasing. Our loan quality is decreasing. We are not really making that much money. And we've had some banks looking to pull out of the region. So give us, the locals, give us some type of understanding as it relates to the future of banking. We had some policies coming into play where some persons were afforded moratoriums on loans, some leniency as it relates to paying back these loans. But is this sustainable to the banks given the situation that they were facing through the years?
Yeah, Kemar, thanks a lot. I take you even further back before COVID, because I remember maybe a few years ago.
You're very soft, Shane. I don't know if you could speak up a bit.
Maybe better now?
Yeah.
Thanks. Now, Zane, I want to take you back a bit further before COVID, because I remember in 2018 looking at profitability across a number of the banking sectors in the Caribbean. I was looking at Barbados, the OECS as a whole, Trinidad, and Jamaica, and I think Guyana as well. And I think one thing that stuck out to me is that, number one, the profitability is not that high, but particularly in Barbados and the OECS, it was very, very low at the time. So if you look at average the profits earned in a year as a percentage of average assets, for Barbados and the OECS, it was about 1%. Compared to in Jamaica and Trinidad, it was about 3%. Now, those might seem like small differences, but it means 3 times as much in Jamaica and Trinidad as in Barbados. And there are a number of reasons why that could have been the case. One of the reasons is that when you look at the amount of loans that these institutions in Barbados and the OECS give relative to deposits, it's quite low. And then, of course, in some of these countries, the OECS in particular, they have these minimum deposit rates, which Barbados has since gotten rid of. But that essentially means that for every dollar in deposits that a bank takes in, it has to pay a minimum of, I think it was 2% the last time I checked in the OECS. I'm not sure if it's changed since then. Now to COVID has obviously exacerbated that situation, because what it now means is that not only do you not earn a lot, but now you have substantial amount of losses or potential losses that you have to incur because of people not being able to repay loans. And so the moratorium are good ideas to help people to be able to get through the crisis. But if these moratoria will come to an end and banks will have to recognize these losses. And so what might have been a 1% return on assets or 0.8% or thereabouts could be a bit lower. In Barbados' case, is a bit compounded by the fact, of course, that some of these banks took losses, net present value losses during the debt restructuring in 2018. Now that's gone, but that was another factor as well. So I think that when you combine all of these things, unless the Barbados economy starts to grow and banks have the capacity to be able to lend substantially, the outlook isn't great. What you have seen is that a lot of them have tried in numerous ways to improve their profitability. And I always say banks are somewhat like governments in a way, and banking fees are like taxes, right? They impose fees to do a number of things, either to raise additional revenue or to encourage or discourage some sort of behavior. So when you see governments taxing, they might want you to do something else other than the behavior you wanted to do before, or they want to raise revenue. Banks
Mm.
typically might raise fees because they want to compensate for some activity that they feel they're not being compensated for, or they want to direct you to do something else. And one of the big challenges in Barbados is that, and this has been going on, it hasn't been happening recently, but for about 10 years it did, where you had a substantial amount of liquidity being pumped into the Barbados financial system because the central bank itself was pumping a lot of money into the financial system. And so the bank's deposits grew. It had to pay interest on those deposits. Those deposits come with people who come into branches, who use the services, sometimes free, sometimes not free. And so banks have been trying to get people out of branches, to be quite frank, because that costs money. And so you find that people will complain and say, oh, the bank is charging me X amount to go to the teller, or the bank is charging me X amount to cash a check. I'm going to move to the credit union, which for some banks, to be quite honest, is exactly what they want you to do, because then they don't have to pay as much in deposit. So I think that the problem is that with deposits so high, with the cost so high as well, if all these branches that some of these banks have across the country, and remember, Barbados is a very small country, and some of these banks have quite a few branches. The costs are very high, and so the outlook for profitability to me isn't a great one. Now, that
I
doesn't
want
mean,
to challenge. I want to challenge Shane a
of
little
course,
bit on that,
of course,
because I mean I think that, and I'm very conscious that we haven't heard from Kevin and Misha yet. So I want to have a focus question. But I believed in where Shane was, but I've changed my mind. So the traditionally economists would say that having these minimum deposit rates is a really bad thing. It causes the banks to have to deliver these things, that it reduces their profitability. But what it actually did, which I didn't realize at the time when I was supporting in the removal of it, is it forced them to lend. It forced them to use those deposits. Now the banks have discovered that banking doesn't need to be about lending. They've discovered that they can make money by just having deposits through charges. They give you no interest and they charge you. They charge you for using a bank account. They charge you for using your credit card. They charge you for using your checkbook. They charge you for your ATM transactions. And now the banks are making money from people just having deposits. They don't need to lend. And we've had the massive implosion of lending. I've been looking at, I'm from time to time an expert witness in international financial trials. And traditionally, loans are over 100% of deposits, or they're close to 100% of deposits. In Barbados today, they're 55% of deposits. So the average deposit, people put in a deposit, the amount that is lent out is almost half of every dollar that's put in a deposit. Whilst internationally, it's almost the same amount that people have deposited. And because the banks aren't lending, and we're in a private economy, that's actually really bad for the economy. We don't have enough credit. Credit growth is really poor. So I think if the banks are really concerned about profitability, why are they not lending? And the reason why they're not lending is they don't need to lend. They're making money without lending. And that's partly because we removed the minimum deposit rate.
So Dr. Prasad, before you continue, would you support then reinstating the minimum deposit rate? And if so, for what percentage?
I think we need to find something that incentivizes the banks to actually mobilize domestic savings. I'm not sure it should be at 2%, but I think that what we've done is actually discourage them from lending. I'm not sure that a minimum deposit rate is the only way to do that. Maybe there are other ways we can incentivize lending. One of the problems that they have, and the reason why Shane is quite right, that they don't want any more deposits because of our reserve requirements. So for every amount of deposits they've got to put a certain amount of reserves, and they don't get paid interest on those reserves. So it's a cost to them. Well, it may be that we could say quid pro quo, if you're lending a certain amount of money, we'll reduce your reserve requirement. So there are other ways of incentivizing, but I think that I look back, and you always learn from your mistakes. You never learn from your successes. And I look back and I think what I could say, maybe it wasn't wrong, but we did not. The unintended consequence is that we allowed banks to be able to sit back and not be aggressive lenders. And if we have a private economy, we need banks to be lenders.
So where do we then get finance from? I know particularly when COVID hit, you've seen massive levels of increases in lending from the multilaterals like the IMF and the Latin American Development Bank to be able to stem some holes as it relates to the finances that are available for countries. So is that what I'm saying, is that competition for the banks? Is multilateral lending the new way of access to finance for countries? What could that spell basically the end as it relates to private commercial banks?
No, private banks lend to people. They don't really lend to governments in terms of their main commercial lending operations. Certainly they'll buy as assets government securities, but we want banks. What we want banks to be doing is taking in private deposits and giving loans to private people. I don't think that model has changed. Now, the banks are never going to be very risky lenders because we regulate them heavily on how they lend, because when a bank deposit is viewed as money, banks, a lot of people don't get it, and especially a lot of the digital currency people don't get. They think that the central bank prints money. Money is created by banks. When banks give you a loan, they've created money. And the way they create money is they type into your bank account the money of the loan. And that's now cash. And that's viewed as cash and treated as cash wherever you go. And why? Because we've regulated the banks. And because we regulate the banks, they're never going to be very risky lenders. So we need alternative types of lenders. We need a very rich, diverse field. That's why I'm one of the strongest champions of credit unions. We need different types of institutions that lend and assess your risks in different ways. We don't just need credit unions, though. We also need things like crowdfunding, crowd finance. We have something called Carry Lend in Barbados. We have building societies in Jamaica and other places. I'm sure in Nevis there are other entities too. We need a rich ecosystem of different types of people who understand, because the key to lending is risk management. And the key to risk management is knowing your clients. That's why I love credit unions. Credit unions know their clients better than the banks do. The banks today treat clients as a number. And they look at numbers, they look at stats, and stats and numbers are very important, but they don't really know their client. The credit union doesn't use as many numbers as they should do, but they know their clients better. And that's why they're not bad risk managers. And we need different types of lenders who have different types of relationships with people, understand people better, and they can lend better. The more you understand, the more you can lend. The final point, the reason why the Canadians are retreating is they put all their risk managers in Toronto. And if your risk managers are in Toronto, they don't understand who they're lending to. If you're 1,000 miles, 2,000 miles away, you cannot understand who you're lending to. If you don't understand who you're lending to, you start lending less and less, and therefore you start making less and less money.
So Nisha, I want to get you in here. But before I let you make your points, I just want to agree with Professor Prasad, especially as it relates to the issue of banks, and our financial systems are dominated by foreign banks mainly, as we know, and the high costs associated with doing banking business is starting to be a turn off for a lot of regular persons, not everyday persons who may want to engage in banking. We're seeing the high cost of fees coming on, even as it relates to entrepreneurs and business accounts. The tax that these banks are putting on you is very, very costly. And he recommended credit unions. Nisha, you are the compliance manager here. So first, I'd like you to explain what a compliance manager is and how plausible is it to implement some of these innovative ideas from a compliance perspective.
Thanks for that question. Before I answer your question, I want to go back to what Professor was saying. And I have to strongly agree with your views because I personally came from, even before I got into banking as an economist, I would have written a paper on the evolution of credit unions. So I have a very intimate relationship with how credit unions work, where they came from and where we're going right now. And I think that they're on an upward trajectory. I say this because when I first got into banking, I went to a commercial bank. And I remember I struggled. I felt like a round peg in a square hole because I felt like the humanness was being removed from the transaction. When a customer comes in front of me, sits in front of me for a loan that is local, but then I have to take the customer's information and then send it to Trinidad, or as you said, send it to Canada, for them to make a determination on a customer who they have know nothing about, have no affiliation with that particular customer, then to make a determination. When the persons who are on the ground, who understand the customers, who have an intimate relationship with the customer, can say, hey, I can vouch for this person because John Brown lives down the road. John Brown understands that, you know what, he has to bring his money over the counter. And the credit unions get you. And I remember when I moved from commercial banking into a credit union, and I was told that was probably the worst decision you could ever make in your career. Why would you go from commercial banking into a credit union? It's like you lack the vision to see that, well, commercial banking is where you're supposed to be. But for me, that's not what it was. I saw that credit unions was really the way it was supposed to go if you want to see development within the economy. Recently, there was some reports said that credit unions actually contribute 1.21% of the overall GDP. And it may sound like a small amount, but trust me, it has a lot of impact when you're talking about financial institutions. And I say that because when coming to a credit union, it was a shift for me because I remember having been in an environment where the humanness was being removed, and now I'm in an environment where the humanness is now being put back in the hands of the person who has the interview with the customer, who has the interaction with the customer, who the customer is now their neighbor, and you understand how intimate and how much then that the lender understands the persons who are coming for the loans. And beyond just credit unions, you would have mentioned crowdfunding, and it has become very, very big here in St. Kitts and Nevis, where we see persons of like minds come together, and they not only just lend, but they also contribute towards the economic development of the economy. And I am glad that I'm in an era where I can see these things happening, because in 2015 or 16, I would have written the paper also on the development, or why it was on the liquidity creation. Does the liquidity creation of the banks, does it contribute to the economic growth? And the consensus of that paper was that it really doesn't, because banks are too scared to lend. And they would be too scared to lend because they have removed the humanness out of the transaction. And as Shane would have also mentioned, when you're saying fees, but I see it as more of a deterrent, as he correctly said. So instead of me coming in the bank, you charge me $5 for coming and having a conversation with the teller, go to the ATM. I won't charge you for going to the ATM, but I'll charge you $5 for coming in front of me to do the exact same transaction.
Kemar, can I ask Nisha and Kevin a question, which is that, because I think all of us, and Shane as well, we're all agreeing with the idea that we do need to have these other players, credit unions in particular. But there's clearly a challenge. So I want to know how Kevin and Nisha are going to solve this challenge. Because how do we modernize? Because the credit unions, on average, not all of them, have a lot of opportunity for introducing new systems, new digital, new technologies, and modernizing their systems. But how do they do that whilst preserving this humanist that Nisha talked about, this knowledge and intimacy they have with their clients? What is the principle they're going to use, or how do they think about maintaining that? And because the last thing we want is credit unions looking like banks. We want them to maintain their distinctiveness and their knowledge and operation, but at the same time, they do need to be more modern. I mean, I'm sure Nisha and Kevin's credit unions are very modern, but as a regulator of credit unions, I see all sorts. And I see some still using ledgers and not having annual accounts and not having annual general meetings of their members. So how do we modernize but preserve that? I worry that we're actually going to turn credit unions into banks, and I don't want to see that.
But I don't want to add to. I just want to add to his contribution, and then divert the question to you guys, the credit unionists. As it relates to the regulation of credit unions, with these innovative ideas not provide for a change in the structure of credit unions that will essentially turn them into banks. And the point that I want to make to that is credit unions, as far as I know, hardly have any access to the international.
You're breaking up.
I don't know if there are large investments of US dollar credit unions. So would an idea like that be plausible? Let's say given the circumstances, and know what would be the required changes that are needed from the regulator's perspective to make that happen?
Well, you know, I think one of the things I found, I was born in Barbados, as you know, but I studied abroad and came back 12 years ago. And one of the things I really value about Barbados and some of our other islands is the value of dialogue. I remember going into my first ever meeting, Kemar, with the credit unions, bracing myself to be heavily abused because they had been demanding to have deposit insurance like the banks have. And I said to them, I'm happy to give you deposit insurance, but the reason why you don't have deposit insurance is because we don't regulate you. And we actually give deposit insurance to banks because we regulate them. We know exactly who they lend to. We know why they lend. And we have very high ratios of capital to lending. And as a result of knowing all that, we can insure their deposits. And when we insure their deposits, we don't actually have to insure their deposits. We don't actually have to put aside a massive insurance premium every year to deposit or to insure all the bank deposits in Barbados, because the likelihood of them going bust is low because we regulate what they do. So I said to the credit unions, the association, let's come up with a deposit insurance mechanism, but you'll have to accept a little bit more regulation, because otherwise we'll be creating huge liabilities, huge risks and uncertainties. And, you know, being the Caribbean, they looked to me and said, yes, okay. We don't, if we will do that trade-off. If you could give us insurance, we'll maintain higher ratios of capital and liquidity against our lending. And so I think that is, if we want to give the credit unions, and I want to, ability to do different things, again, I don't want them to ape banks though. I don't want them to simply do what banks are doing. I think they should try and maintain their distinctiveness and do different things. But we need to give them more freedom, and that we can give them more freedom, but we need to perhaps regulate them a little bit better in terms of maintaining the amount of own resources versus the amount that they lend.
Okay.
So,
Nisha, you want to respond?
I'm waiting to respond. So what I gather from you, Prasad, is that you will give us freedom if you have control.
give you freedom if we have control. It's not control. It's about it's regulation control.
It is.
And if you want no regulation, then you can't also want lots of help from the state.
I agree. I strongly agree.
So that's the trade-off. I do notice that you used to call me Professor Pasord, and now you just call me Pasord. So I think I've annoyed you, but but
Yeah.
I mean I want to get that trade-off right. And you know what does a regulation mean? In the way we regulate banks, we say that for every $100 loan, $8 of that $100 loan should be the bank's own money.
Mhm.
Right, that's the regulation, and what that does is encourages the banks to be choosy on who they lend to, because it's their money at risk. And if there's a loss of the loan, they lose the first $8 is their money. So we need some mechanism. Now, credit unions aren't profit-making entities. They don't have shareholders. So we need to think about how we regulate them well. But it's really just about making sure, because there are great credit unions and they're not so great credit unions. And the thing is, if the not so great credit unions fail, there will be what they call a contagion of information. Shane has done a lot of work on these kind of banking crises. If a bad credit union goes down, it will affect the reputation of the entire sector. So good regulation, good credit unions often like regulation because actually keeps the credibility of the sector. But I don't want to do it in an overly onerous way. It needs to be done well, and I get the sector wants to talk. We want to talk. Let's talk together and develop a way of doing, keeping it nice and simple. Give me a simple ratio.
Could I jump in a bit?
Please.
Yeah, I just wanted to. So I wanted to be clear that I wasn't defending banks. Okay. I was just trying to explain the context within which they operate. Now, I do agree that there's a need for credit unions. I think they play a very important role in Barbados and its development. I think, though, that the point I was trying to make is that in general, the landscape that banks and credit unions as well are operating in is not one where they have been extremely profitable. And I think we have to understand why. And it might be the case where, as you said, Avinash, there needs to be more creativity. There needs to be more technology used to improve the efficiencies. But even if I look at the Central Bank's Financial Stability Report, the profitability for credit unions was worse than commercial banks, even with a higher loan to deposit ratio. Because you mentioned that was the reason one of the reasons the banks were not profitable. And so that is an issue. So I think that there is a role for credit unions, but I agree with you that they need to be, well, not that they need to be regulated. I think that if they want to grow as large as they want to be, instill the confidence in depositors that they want to, they might need deposit insurance, but they might need regulation. But that comes with a cost. That comes with, as you said, holding more capital, which restricts how much you can lend, which means that you can't be as free. Kemar mentioned the point about the multilaterals coming in and potentially being competition. I actually think that they help to complement, because if you look at the IDB provides for some countries money for credit guarantee schemes. And I think those have been, I was looking at Brazil recently, a lot of Brazil's credit growth last year, which was double-digit credit growth, was because of credit guarantee schemes that the government provided to banks to allow them to be able to lend to small and medium-sized enterprises. And so you would expect that during the year of COVID, that credit growth would be very weak. In fact, in Brazil, it was going through the roof because banks were saying, well, I can lend to you and the government is going to take 80% of the loss if something happens. I know we have something like that in Barbados, but I'm not sure that it's used.
We have the enhanced credit guarantee scheme at the I think it's only about $20 odd million, and we're trying to extend that to around $50 million. It's been actually a very successful scheme, and you're quite right. You know, people often say that the private sector is a risk taker, but in fact, it is through public sector guarantees that the private sector has actually started taking more risks.
Yeah, Kevin, we want to get you in here, Kevin.
Yes, thank you, Kemar. Shane, yes, the credit union. I think you said that the credit union movement is more profitable than the banks, even though we would have a higher loans ratio, right?
Based on the Central Bank's Financial Stability Report, not based on my.
So that might pertain a little bit to what our mandate is in terms of people helping people. also to that we're not just driven by profit, but also to remember prior to the pandemic to what the credit union movement was going through. The credit union movement was gone through a situation where the corporation tax on banks was, well, not just on banks, but on companies was reduced all down to, I think, about 3% or thereabouts, right? You then had a situation to where when the minimum savings rate was removed, the credit, as you said, the banks really and truly would want for the clients to move the cash to the credit unions. But in doing that, then basically it's like when that action was done and the deposits then move across towards the credit unions, all of a sudden now the interest on that becomes an expense. So even if the credit unions were more profitable, the fact that what the government did in two instances, reducing the corporation tax and then also to removing the minimum savings rate, which then caused, you have seen a balloon in terms of the deposits for credit unions. That then would have then caused the interest expense then to increase and basically then reduce, along with the debt restructuring. All of that would have created a cataclysmic effect on the credit union movement. Dr. Prasad, with relation to what you said about how the credit unions can avoid becoming banks, as long as we stay true to our purpose, people helping people, maintain a consciousness with regards to the social balance sheet, right? But in integrating the technology, this is where the integration comes, and it will be a type of hybrid model. The hybrid model is where, yes, you have a customer facing outlet still, but now you utilize technologies like CRM, customer relationship management, right? So now you are keeping abreast. It's like you're building a community virtually, right? So you still continue to have the face-to-face, but for generation Y, generation Z, that how they see relationships might be different to the previous generations. You are still facilitating a community there where you can still interact with them, keep up to date with who they are, how they're doing. And I think that's how we build a community with regards to this. But I'm very excited to hear some of the things that you said with regards to the credit unions. I honestly believe, I sincerely believe, I used to work in the bank as well too. And similar to you, Nisha, when I actually first went on the credit union board, one of the first things I looked at the financials, I noticed that, we have to put some taxes, some fees here, some fees there, right? And someone was kicking me under the table. When it came out, I was like, but you kicking me under the table. They said that's not how we do things, in the credit union movement, right? And so, and I know probably I'm most against fees, and I've watched and seen that we could still create significant profitability even in the absence of driving fees. But I honestly think, I don't know, this might be an idea that's out there, but I really think that perhaps we should even consider, why if we recognize that the strategy is to send the deposits, is to cause the deposits to go over to the credit unions, can the government perhaps do something to mitigate, mitigate the effect of it? Those are my
Sir, before you respond to what Kevin was saying, I just wanted to read some of the comments that were coming in from the live. We had David Waldron, who's saying he loves the show. It's very informative. He also asked the question, what are the disadvantages of not having locally owned banks? Paul Gibson is still going well. We had Jermaine Bedford saying he wants to hear what is our economic mirror image 50 years from today, and what will Barbados look like, and where do we want to be? He also said he loves this show. We had, whoa, okay. Right, you had some person saying regulation means nothing when you have no enforcement. We said, so Dominic Tudor said we need to know all of this for a fact. What measures have been made towards addressing our local challenges to progress? Is this a new proposed federation? I guess since she was meaning Dr. Prasad's CARICOM report, And how do we join only a few countries and leave the rest behind? And she asked, what does it mean to be Caribbean United for profit? Someone said the larger credit unions in Barbados are essentially banks without the same level of regulation. She also said, pleased to hear about this CARICOM Commission document. Hopefully, the pipe dream of yesteryear becomes a reality today. She also said, when you regulate the banks to be more prudent in their lending, how can you want them to lend more in a risky environment? Gail Carty said, another interesting group and panel discussion for tonight's show. I must say that women understand economics and always have been doing it much better. I'm guessing that she's meaning Nisha's being the star tonight. Dominic Tudor said, great question and discussion. Said, but why not be regulated? Isn't the purpose to protect people in the state? And someone asked, maybe we should develop peer-to-peer lending. So, I mean, so you can go on, you can address anything that was said from the comments, or you can respond to anything that was said on the floor.
Well, those are lots of great questions. We are developing peer-to-peer lending. So the way I tend to think about it is that there's a what you might call, in a grandiose way, an ecosystem of lenders. So there's not one type of lending. There's not one type of lenders. The banks are always going to be an important part because they represent an important part of the payment system. You're going to have credit unions who hopefully are going to be an important part of the link to communities and understanding people. Then you're going to have peer-to-peer lenders. A carry lend is a type of peer-to-peer lender that we have. They announced they hit the $50 million loan mark the other day. We want to see more of them, and we're actually devising a way of regulating them, which is very similar to the way we want to regulate credit unions in terms of having a ratio of capital that they against each lending. Someone said there's no enforcement. I don't think that's true. Every board meeting that the FSC has, there will be a couple institutions that are being wound down, either being wound down by us or they're winding themselves down because they've not been able to maintain the regulatory standard. We tried, the winding down is not the first thing. We tried to help an entity in trouble and make it clear what they need to do, bring in some external management or accounting or whatever. But sometimes you have to wind things down. So there is enforcement. We haven't seen any major blow up since CLICO in our financial space. Someone said, why should we not have only locally owned banks? Well, I think you should have a mixture. Overseas banks can bring capital, which allows more lending. They can bring technologies. So for example, think of the payment system. The most efficient, low-cost payment system was developed in Kenya, M-Pesa. We would like to form a common regulatory space with Kenya. So Barbados and Kenya in one regulatory space. We've had discussions with the Kenyan Central Bank and the Kenyan head of the regulatory authority on progressing this. And that will be a way of us tapping in to payment technologies, bringing ideas overseas. It will also allow Kevin and Nisha, if we would extend this across from Barbados to also Nevis, to be trying to get customers in Kenya. Kenya is a very large economy. So I think that there are benefits to having international entities. You just don't want your entire system to be international, and you don't want to have none of your system as international. You want a mix. There were a number of other questions. I don't know if people want to, I think someone said, how can you have people lend and regulate them? Well, life is a balance. We have to, and I think that different instruments, let me make this my final point to help to bring others into the discussion. Different instruments have different types of risk attached to them. And so a loan is something that can't be too risky. but an equity investment where someone has more upside if the investment does well as lots of downside, that can take more risks. So what we need in our financial system is, again, greater diversity. We need to have banks, credit unions, peer-to-peer lenders, but also equity investment houses where you don't give a loan to someone, you invest in their company. You have a stake in their company, and that allows them to take more risk. So you need lots of new instruments that meet all the different demands of what investors and people need when they borrow and invest.
So I wanted
Dr. Prasad,
before you go on, because I really want your take here as well on this question. Out of this peer-to-peer lending and loans and the advances credit that the financial institutions seek to make, yes, we understand that the idea is profit oriented, but as it relates to entrepreneurship, even if when you read the respective reports, the central bank reports, the financial stability reports, you always see that credit to private sectors and credit to businesses. I've never really been into the financial statements of a credit union to see how much they lend to their commercial side, but I don't think that, I just speculating, but I don't think that it was significantly higher amounts as compared to personal loans like for cars and mortgages and these other loan qualities. So again, the credit unioners, I really want to hear your perspective on the quality of credit to the entrepreneurs and building entrepreneurs, and if the current structures of the banking system and the credit unions will come into competition given the rigorous structures from the crowdfunding platforms and the peer-to-peer lending platforms. So Kevin, you, and then we're going to hear Nisha.
Okay, well, basically, no, I would not necessarily say that in some instances, business loans constitute a large amount with regards to your portfolio. Generally, with what credit unions do, if we want to onboard a business member, generally we have to write to the FSC and, allow them to know, provide them with information on the person for us to be able to onboard them. I think we've been having discussions with the FSC to see how we could try to speed up that process, because if the credit union is really about economic enfranchisement, then one of the strongest loops in this mix has to be the business customer. But I think we need to get very imaginative pertaining to what we do. Yesterday I was on an international call, for instance, and this American credit union, they were saying that there was some credit union, there was their membership constituted agricultural members, and there were a lot of these wildfires and such like, and they decided, we want to provide loans for fire engines and stuff like that, but we want to control this risk. So they set up a CUSO, and basically each of them contributed funds towards forming this CUSO, and then they were able to lend to facilitate their membership with regards to purchasing the fire engines so that you could have volunteer firemen. So what I'm saying is that we could get creative with it as well too, but it is something that once, as we have further dialogue with the FSC, I'm sure is going to increase.
I just comment a little bit. Sorry, Nisha. Just to respond directly to what Kevin said of business and the FSC. I should say that we're using the language. We have to be careful. We're not. We're using the language of banking a little bit too much here. It's profitability. Credit unions are not-for-profit entities. They want to create surpluses, and the greater surpluses they have, the more they can lend more safely. But they're not like a bank seeking to generate a profit they'll distribute to their shareholders. And I think that's a very important distinction that we want to maintain. But we want to get the credit unions involved in a renewable energy, which they may be investing in to companies. So that may be the avenue in which they can be lending to companies as well as individuals. So we have told the credit unions, we've sent a message written to them that we encourage them to be investing in green energy bonds and renewable energy. We view this as a low risk thing. The FSC will approve it as an approved lending for the credit unions. And there's been very, very, very little lending by the credit unions. And so we were scratching our heads thinking, why is this? And we're thinking maybe we need to bring the credit unions together as a group. And they will then invest as a pool. And then we go to the group of producers of renewable energy and let the credit unions directly invest in them. So play some role in helping to bring the credit unions together with the people who've got the investments. Because although we've told them, go ahead and do it, and it's here, maybe because it's a different kind of lending, it's a different type of lending, different risks, they seem so far to be reluctant to do it. It's not happening yet.
Dr. Prasad, on that, what I would say would be
Kevin, before you respond, I wanted to get Nisha. She was trying to get in for a while. So you can go. We're going to hear you, and then Shane, you've been quiet, so we want to hear you after Kevin for sure.
I agree with the points thus far. Someone would have mentioned about, you remember, I think you have to remember the kind of makeup that the credit union has. Is more about this, is more of a social good or more about socio-economic development rather than for profit. So when we are using the term profit so loosely, we have to be very careful because it's not really for profit, but it's more about developing the socio-economic of the economy, and that's where our role comes in. So as far as having businesses, even though my credit union, our credit unions here in the Federation, that we do have business customers, we don't delve into corporate. And you can see here, we here in our circle, we do develop businesses, small businesses especially. And I think that if us here had that opportunity where we can have a concentrated risk or a concentrated sector where we can lend money, I think we will take the opportunity and run to the hills with it, because that's what we are trying to do. As much as we don't see ourselves as the bank's competitors, but they see us as their competitors, we know that we have a role to play. So if we are talking about climate change, if we're talking about moving to a green economy, we can see how that can positively impact socioeconomic as well. So, and that is the role that I think that Prasad is trying to bring out, that we're not talking about profit, but we're talking about the socioeconomic impact that the credit unions will have, not only on just the credit union sphere, but on the economy as a whole.
Can I add a dimension to what Nisha just said? So we have, to boost renewable energy, the country has very attractive feed-in tariffs. That's like a guaranteed price you will get if you have a renewable energy plant, solar panels on your roof or wind. You plug it into the grid and the grid will pay you a fixed price for 20 years. They're so attractive that there's a 12% type return you could get from doing this investment. It's one of the best investments you can do. You don't know, where else can you get 12% return? The bank's offering you 0.3% before they've got charges. The credit union is not giving you 12%. So 12% is a great investment. It's also a safe investment because it's coming from Barbados Light and Power, Emira, a Canadian-based company. With a better credit rating, I'm afraid to say, I regret to say, I'm sad to say, a better credit rating than Barbados. This is a good investment. And so if we don't do something, the only people who will take that money, and that money comes from the ordinary consumers of Barbados, of electricity, the only people who will make 12% are the people who already have money. And so the credit union must be the way in which we can distribute and share this return to the wider set of Barbadians who on their own probably couldn't build one of these renewable energy projects, but through their credit union, they can have a share. And that's why we're so keen on it happening, because otherwise us offering attractive feed-in tariffs is actually going to get us renewable energy, but it's also going to reinforce the inequalities of capital in this country. And that's the biggest problem. We have distributed education. Coming right back full circle. We believe education was the only cure to get out of poverty. And you know what? We worked out it was essential, but not sufficient. Capital also matters. Ownership also matters. And the credit union is a very important way in which we can get ordinary people having ownership and getting a return from it.
Dr. Prasad, I'm truly enjoying this discussion. I think the green space is a space I'm very, very familiar with, right? And I actually think that there's so many ways the credit union could actually be the catalyst for us making the 2030 goals. So for instance, the credit unions, if this is an investment, the credit unions could perhaps allow it to be, could purchase it, place it on someone's roof or what have you, probably allow it to generate revenue. And at a certain stage, perhaps even facilitate the transfer, back to the person after a certain point, after you have achieved a certain interest rate and such like. I think also too, what may probably fear credit unions a bit more, for instance, in section 34A of the Act, it speaks towards investing in companies that have turned over profitability for 5 years and such like. I think if even we find a way to facilitate equity investment by the credit unions into these entities as well directly, right? I think that that is something as well too that then can redound to the benefit of the member through then the credit union then offering green energy bonds and such like, right? So
that's an extra level of risk though, Kevin, right? So we need to find a way of managing that well.
I was just about to say that means
equity investment.
Yeah.
Well, equity investment you're saying 5 years is a bit long for your members' companies, and you're saying equity investment. So that's raising risk. I'm not saying not to do it. I'm just saying there's two steps of risk you're taking now. Small companies that have only recently started and taking an equity investment. Now,
no, what we're saying is that we adhere to the. What we're saying is we adhere to the act, right? We continue to adhere to the act, which has a 5-year requirement. But I mean, there are a couple of companies that we've been doing this for longer than that, and I think then that you could create a CUSO as well too. So.
We just need to think of how you manage it, as Shane was saying. I mean, either that's through by making sure they're very diversified, by making sure it's a modest part of the portfolio. The key to all risk management is often diversification. So as long as we can spread the risk and making sure it is not too concentrated, then yes, we will certainly look at that.
And capping the risk, so you could decide that there's a ceiling that you're not prepared to go beyond. It could be X%, and when you reach that percent, similar to like how mortgages is not ideal for mortgages that exceed a certain percentage of your portfolio as well too. You do the same thing. So
great idea.
Risk identification and then setting that risk appetite.
Marge, I want to make a couple points here. One on the credit unions, and then one on something a bit more regional, because we've been very Barbados focused, I feel, in some aspects, not all. I think from what I remember way back when I was at the central bank, the credit unions, there are about 3 relatively large ones, 2 or 3, and then there are quite a few of the smaller ones. The 3 larger ones, I think at least 2 of them were maybe the size of a small bank at the time as well.
Yep.
I think a lot of the things that Kevin is speaking about, a lot of the investments you want to make, even being able to lend to some of the larger small businesses, if you allow me to use that term, I think those things might create a certain level of concentration risk as well, and large exposure risk as well. I think there might be a case where at some point in time going forward, some of the smaller credit unions may have to consolidate to allow them to be able to do those things. Or they can remain small and continue to serve the average person. But I think those are the risks as well that needs to be managed, because as you get larger and you want to do bigger things, you need more capital to do that. And that capital either needs to come from your members or shareholders, or you need to generate surpluses rather than profits. Let's use that term. On a regional basis, though, I think one of the points I was making at the beginning, which I think is still very important for Barbados, is that there there is no limit in the supply of money to be lent to people in Barbados. The banking system has a whole set of deposits, and the credit unions have their own deposits as well. I think part of the challenge is that we have this situation where banks and credit unions are trying to shift the deposits between each other. No one wants to hold them, right? And that creates a problem for the society, for Barbados in general, not just for one institution. I think Avi mentioned at the beginning, having free movement of labor, free movement of goods, free movement of capital is, I think, one of the big things that needs to be expanded. I remember about 6 or 7 years ago in Jamaica, Jamaica has 2 very large banks and about 3 or 4 smaller ones. The smaller ones were actually starved for liquidity. And when I say starved, I don't mean they were, failing or anything, but they did not have enough Jamaican dollars to lend. Now, obviously, we all have different currencies, and this is probably a discussion beyond this particular segment or show. But what if the excess liquidity in Barbados could be channeled to Jamaica to allow them to lend? We wouldn't have so much liquidity in Barbados anymore. So banks and credit unions would not be forced to have to funnel it amongst themselves and decide who doesn't want to hold it. And the banks in Jamaica could lend it, and Jamaica could benefit. It could be a time in Barbados where Barbados is starved of liquidity and may need some funds. Because at the end of the day, the challenge is that, as Avi mentioned, the banks can lend more, but that credit creates more liquidity. That credit creates more money. The amount of credit the banks would have to create to suck up all the liquidity in the system is an extremely large amount, right? And so I think when we think about these things at the Caribbean level, we have to think about the integration that allows capital to move around as well, so that we all benefit from these things.
Can I build a little bit on what Shane just said, Kemar, because we touch on that a little bit in the CARICOM Commission report. So, just a couple of weeks ago, a famous economist passed away, Robert Mundell. He won the Nobel Prize and is considered the father of the euro. And Mundell had a theory which basically said that we don't need everything to be mobile in order to get the same effect of mobility. If labor was completely mobile, then we don't need capital to be mobile. If capital and money was completely mobile, could go anywhere, could chase after the unemployed people in Jamaica, money from here could go off there and invest and support that, then you wouldn't need mobility of labor. So I think that getting greater mobility is important, and we can think about if some things are difficult, you might think about getting more mobility in the other things. And I think that mobility of capital is perhaps easier than mobility of labor. And one of the things we propose in the CARICOM Commission report is that there should be a regional financial conduct authority, because financial regulation involves 2 things. It involves working out whether Kemar Stuart is a reasonable person that we can trust to handle our money. Are you a fit and proper person?
Certainly.
That's right. Have you been involved in any dodgy dealings in the past? Now, that requires a couple checks, but it's not. There's nothing unique about me doing that check in Barbados, or Shane doing that check in Jamaica, or Nisha doing that check in Nevis. So why don't we do that check once? And so that we now give Kemar a license to operate as a financial activity across the Caribbean. Now, where there is local regulation is on how much the ratio between his own money he is going to put up when he gives a loan. We can allow different countries to have a different ratio. If a country is in boom and doesn't want to have more lending, adding to that, they could have a higher ratio. Kemar, you're going to put in more of your own money. But if a country is in recession and wants more lending, they could have a lower ratio. As long as what they do the ratio of is common, everyone is transparent, we can all see it, then we'd get much more movement of capital, and it would make our regional economy more efficient. The Jamaican lenders want to lend, but they've got a lot of activity going on in Jamaica. Our lenders, they keep on saying to us, they're not giving loans because they can't find opportunities. I think that's only half right, but it is half right, and maybe they should find opportunities around the region, and it will boost their profitability. It will boost the amount of lending, and maybe Barbadian lenders aren't lending us in Barbados. Maybe Jamaican lenders will lend to us, and that will create some better competition. And the final thing Shane said that I want to touch on too is the long tail of credit unions. So we've got 2 to 3 big ones, we've got some middle-sized ones, and then we've got a long tail of small ones. Now, I don't want to lose the character of the small ones, their unique understanding of their customers. Often it's around a particular trade or particular type of area. So I wonder whether we could have a centralized service. You know, a group of small credit unions could come together and then they do centralized services, because the cost of doing business as a credit union are a lot of common things, common record keeping, common auditing functions, and maybe that will allow certain small credit unions to exist as a separate brand, their own customers, but that they actually are sharing these services, and therefore it's more efficient. I'm not sure whether that's a solution.
Well, just a reminder that we are streaming live on VC3 TV in St. Vincent, and I just want to again thank you to the viewers for tuning in. We are having a very riveting discussion. I'm actually enjoying the points of view from all of the panelists there. But to take a common point from what Shane said and Professor Posad said was that of mobility. We've seen recently where on the Jamaica Stock Exchange that the Guardian Group was now listed recently. And I just want to congratulate Guardian for making a move like that. Now, I find that in Barbados, that the stock exchange is not trying to down it, but it's basically slow to almost inactive. And there's not great mobility of finances coming through the Barbados Stock Exchange. I see the ones in Jamaica and Trinidad are way more active as compared to Barbados and other stock exchanges through the region. So I would definitely want to hear a perspective from the panelists. What is your take on stock exchanges? What can we do to innovate or increase the attractiveness of stock exchanges as a means to mobilize finances in the region? And why are our companies preferring Jamaica over Barbados, really?
Well, that's where the money is. The reason why you want to issue in Jamaica is that the investors out there who are happy to buy your paper. We don't seem to have that. Now, it's a bit of a chicken and egg situation. If you've got a dormant stock market, then there's less money looking around for new things. I think the first thing I'd say, though, is that we don't need to lose a lot of sleepless nights on the stock market. Stock markets are a little bit like an airline. Everyone wants to have one. But actually, only 11% of all corporate investment comes from the stock market. So the bulk of the rest, almost 90%, comes from two things: retained earnings. A lot of companies reinvest their profits in themselves. And secondly, from borrowing from the bank. So we need to make sure our banking system is lending. We need to make sure that, and that's actually more important than making sure we have a liquid stock market. Now, because we've had challenges having a liquid stock market, I think the other thing is try and make it more regional. So allow our companies to issue in stock markets around the region, and allow other companies to issue on our stock market if they want to. But why would you go to the Jamaican market? That's where the money is. We need to have the money here. We need to have active investors looking for things to invest. And let me end with that point. We actually have a lot of public money. The National Insurance Scheme has got $4 billion of investments. We have other public money invested. And I think we need to create some, one of the challenges we have in Barbados is we don't have intermediaries. We don't have, you might call them hustlers. Hustlers is considered a bad word, but we don't have people who come in every day And their job is to find an investment opportunity and find the money and match the two. And so people have to do it themselves. We don't have an industry of intermediaries. And one way in which you might create that industry is by saying, okay, you've got $4 billion in the national insurance scheme, maybe half of 1 billion, so 1/8 of it. We go to the marketplace and we say, who will invest this money? And we therefore get 5 or 6 or 7 asset managers who will invest that money. And if they don't do a good job, they lose it. If they do a good job, they get more of it. And we ask them to invest. And then you'll get a more active stock market, because then you've got money and you've got investors looking for things to invest in. Today, we have no one looking for, not a lot of people with money looking for things to invest in. And that's why we have a dormant stock market.
I would like to go back to the point that it kept being raised about the free movement or the movement of money. But I think if we're going to continue to talk about the movement of money, we also need to talk about a bigger regulation or a larger scheme of being regulated. Because, for example, when we're talking about the Eastern Caribbean, they would have recently created the DXCD wallet, where there's a free movement of money throughout the OAC countries. And if we're going to talk about those things, yes, it might be regulated by the central bank. But if we're going to include the Jamaicas and the Barbados, we also have to consider who's going to regulate this now as well.
Well, remember the CARICOM Commission report is saying there could be one single conduct authority across the region, deciding whether Kemar Stuart is worthy of being a fit and proper person, right? You only need one person. Now, payments, we've just in Barbados, you may not have seen, but we've established a new payments regulator because to encourage a greater variety of payments players, people who are efficient at taking money from your bank account to the vendors, to the shop owner's bank account. That banks are not particularly good at that. Banks charge a lot of money for that. And there are a lot of people using digital technologies, using e-wallets, etc., who might do it cheaper. And so we decided we shouldn't regulate them like a bank, because that's very heavy regulation. We can regulate them simply as a purveyor, a conveyor of money. And so we've given them a lower threshold, because all they're doing is conveying money from one end to another. They're not loaning out money. And we've got a new regulatory body doing that. Maybe that can be done on a regional level too. That's a really good idea for us to think about.
Shane and Dr. Prasad, I'd like to know what y'all think about in terms of similarly how in insurance, for instance, if insurance company wants to insure a beachfront property, they might look at it, assess the risk, and say, well, I'll probably charge a higher premium for the risk. But what I'll do is I'll have co-insurers along so that I mitigate the risk, right? What do y'all think about loan participation, some call it loan syndication, as a measure to perhaps mitigate the risk with regards to business customers?
I think that's a really good idea. And indeed, what I would recommend you do is you find 2 or 3 credit unions that you get on well with, you understand their business, you see eye to eye on things, and come along to the FSC and say, we're going to create a product where we do a third for every loan. And we've diversified our loans. And the FSC will say, fantastic, because you're now more diversified. You are safer. Please do more.
Yeah, I mean, banks do it as well. They've been doing it for a while now. I know sometimes they do it to get around the same issue I mentioned before, which is large exposure limits. I mean, you have some of corporations in Barbados and the Caribbean that are, believe it or not, extremely large, and lending more to them would actually put the bank in a position where it would breach the regulations that the central bank has imposed on them. And so you do find that they partner together. I think the issue, though, of course, is making sure that both banks or both credit unions or 3 credit unions assess the risk in a similar way. And of course, that they're not competing with each other, because that usually happens when the loan is too large for one bank. Otherwise, they just I don't want to say be greedy, but they take it all on their own. But certainly it's something that I think to mitigate the risk is a viable option.
And I think it's a really good idea, Kevin. So I'd recommend if it's easier, sometimes you need a player who isn't actually the lender but is a host who brings people together. And the FSC will be happy to play that role. So if you want us to invite a few people, credit unions together, we could host the meeting, provide the tea and the coffee, and simply say, we think this is a really good idea, but what you'll need to come up together with a little protocol and how you share the risk. Who is the lead? Because what you don't want to happen is things fall through the cracks. Everyone else thinks someone else was checking on the loan. So how you decide who decides this is a good loan to have, and then once that's approved, how you split it up. Well, that was one of the problems with the global financial crisis. They split up loans so much that everyone thought, well, this is only a small risk, so I don't need to worry about it, because someone else has thought about this. And that someone else ended up being nobody.
Guys, I want to get some comments in, and then we're going to touch on the final topic after. But again, we are here on the DeBrief TV show. This is the finance and business segment. This is our first episode, and trust me, it's going extremely well. I am very pleased with our panelists. Thank you all for tuning in. We are sponsored today by the DeBrief team and Stuart and Perkins Caribbean. Just to take in some of the comments as well, someone said that banks hold the credit union's liquidity. Yes, there's a specific amount that the credit unions have to keep with the banks. Yes, we know of that. And for many persons who say, well, I'm not going to the bank, going to the credit union, your money still ends up back at the bank either way. Yeah, so going on through the comments a little further, some persons say, yes, there's an institutional void. Someone asked, what are the ingredients of good banking? What are we missing? All this talk is fine, and if all things were in place, we would have made some changes. So yeah, someone said right on, someone asked, do you think that Barbados is near an active stock exchange is reflective of an underdeveloped financial system in Barbados? I wouldn't say that necessarily. I think Barbados has one of the most sturdy financial systems. It is, you can see that the financial system has been impacted to some extent during COVID, but it is still very stable, which is a plus. Someone said,
well, Kemar, I disagree with you, because I think the Eastern Caribbean, I think that we are a bit stronger than you guys over there right now.
pardon?
Yeah, we didn't hear that. We didn't hear that.
That's debatable, Nisha. But
Yeah. But I wanted to get you guys. I wanted to get you guys as economists, as finance professionals, as future leaders in your respective fields. What is the vision really for the Caribbean as it relates to banking, as it relates to finance, as it relates to credit unions? We didn't touch on insurance much today, so that's probably a conversation that we can have at another time. But what do you guys really see for the future of the finances in the Caribbean? How can Caribbean people look towards the financial system for empowerment and upward social mobility? We start with Kevin, and then we'll go around table and end with Professor Prasad.
I believe that while the future is very challenging as it is, Dr. Prasad have talked about that, we've been declining since the 60s. I do believe that there are a lot of possibilities in some emerging markets. And I believe there are opportunities for growth in the credit union movement. I believe that once we stay true to our purpose, once we stay true to our passion, once we stay true to our people, that we will continue to accelerate. I'm confident that the movement will make changes with regards to technology, with regards to the Caribbean. I believe that there's going to take a certain homogenization of rules for us to truly do scalability. So you don't want linear growth, you want scalability. You want to be able to grow exponentially. And once there's that homogenization of rules, I believe that we will be good as a region.
From my perspective, I think it is very important to mention that as much as we may say credit unions are good or banks are good, I think it's important for us to understand that everyone plays their role within the financial sector. And the hybrid or how everyone operates within the space is important because as much as credit unions may have a social impact, we also have to remember that we rely heavily on the commercial banks in order to reach into the international markets or to get international services completed. So even though we are thinking about going forward, we have to understand how are we going to then benefit or how are we going to share this space with our partners? Because as much as we might consider the commercial banks to be competitors, they are also our partners because they help us go into the other market, to get into other markets or to service our members who operate within the other markets. So I think it's more about having that shared space and understanding your place within that shared space so you can then propel forward.
I think one of the things I'd like to see is a more efficient financial system, not just in Barbados, but the Caribbean. I think that there are quite a few banks in the Caribbean. I think I've heard someone say in the past that the Caribbean, particularly in the OECS, is overbanked. And that's because you have these banks that are competing for small shares of the market, or they're competing for small markets. I think if we open up the system, as Avi said, if you can have a Jamaican bank lending to Barbadians or a Vincentian bank lending in St. Kitts or whatever the case may be, I think more competition would actually help with banking. It would encourage more banks to lend, as he said. But I think another thing that would help with efficiency is, and we didn't speak about this, but one of the things that makes things inefficient is what you call asymmetric information or not enough information. And part of the reason that a bank or a credit union for that matter may not want to lend is because they don't understand the borrower enough, right? And if you have, like in the US, you have credit scores, you can see someone's credit score, and that tells you just like a credit rating, is this person a good credit or not? And, some people, I am in the US now, and every week I get letters from a whole host of banks trying to offer me credit cards. They don't know me, they've never met me, but they assume I'm a good credit for whatever strange reason, and they want to give me money. And that is probably just because I have a record of paying my debts. And I think some sort of credit bureau in the Caribbean would actually be a very good idea, because then you could have people being able to know their customer without having to go through the nitty-gritty of getting to know them. The reality is that a bank has thousands of customers, and it's always going to be very difficult to know each one of them in the same way as a credit union does. And credit unions, as they get bigger, are also going to struggle with doing that as well. And so I think having this system where their credit bureaus or their credit scores would actually help to facilitate more credit to borrowers, and banks will know who the good borrowers are and who the not so good borrowers are.
Professor?
So the banking industry is part of the information industry. If we had perfect information, we wouldn't need banks. What do banks do? They bring people who've got surpluses and gives it to people who need surpluses and don't have it to invest in. They find the borrowers and give it to the lenders. So they're part of the information industry. And that's why banking has been the most, the sector that has transformed the most with the computer revolution, the information revolution. And we now have much more digitization in the banking system, much more information, much more algorithms and credit scoring and credit bureaus. And all of those are good, as Shane said, they do improve information. But finance is a bit unlike other sectors where homogeneity is a problem. Everyone doing the same thing actually creates a risk. And so the best bank is the bank that lends to people that nobody else is lending to. because they understand that risk better than the others. The best bank is the bank that doesn't lend to the person that everyone is lending to, because they understand the risk better of that person. So we need, for good banking, and the vision of good banking is one in which people are incentivized not just to do what everyone else is doing based on common information and databases, but to actually invest in understanding. And that is why I consider credit unions to be at the core of the financial system, because they have the strongest bond with the people they lend to. They have the greatest potential of understanding. And I really dearly hope that that remains a core part of their character, because that brings good risk management, good lending, not just great development and great community support. Now, in addition to banks, therefore, and credit unions, we need a range of different people who are lending riskier and riskier things, because they know a lot about the people they're lending to. So we not only have banks and credit unions, but peer-to-peer lenders and crowd financing and equity investors. And what we are missing in the Caribbean is really an aggressive set of people whose job it is to come in every day, as I said before, and to try and find investment opportunities and take money and invest them in those things. We need the hustlers. Our financial system has no hustling. It is very sleepy and quiet and dormant. We need people calling up Kevin all the time, not just Shane, and saying, I've got a range of renewable energy projects. You guys should be investing. And if you're interested, I've got another 5 credit unions who want to invest too, and we could do it together. Rather than Kevin having to go out and find it himself. He needs to sit back and have all these people coming with these different ideas. We don't have that, and that we need that entity. Now, what other small island development states have done have used public money to seed that industry. That's what Singapore did. So when Citibank first came to Singapore, and they said they wanted to manage some of the Singapore money in the Government Investment Corporation of Singapore, GICS. I used to advise them in my previous days as a banker. The Singaporeans said, yes, you could have some of our money to manage, but only if you move to Singapore and manage our money locally. And that's how they created a local fund management industry. And now Singapore is probably the number 5 biggest financial center in the world as a money manager. We have pools of public sector money. We need to use this money to help create this industry of Barbadians in mobilizing Barbadian savings to invest in Barbados. We don't have that whole industry. That asset class does not exist. And if it did, we'd have a much more effective financial system. There's $50 billion in our entire region of the Caribbean sitting pretty dormant, doing very little, when it could be mobilized, investing in regional businesses, investing in greater climate resiliency, for example, and many other things that produce great returns. Let me end on this. We started talking about education. Education is a business, and education is a business for private money and public money. Education remains one of the things that produces the greatest returns. And we need to mobilize our savings to be investing in all kinds of things, including education.
So very strong points by everyone. My final contribution would be, Professor, you said that we have $50 billion in the region. I could tell you personally, I would like a loan, and I know a couple other persons as well who would love some loans to develop businesses, create the respective opportunities to invest those funds into rather lucrative industries. I find within the Caribbean, we are underfunded as it relates to if we're looking at from foreign direct investment. We are underfunded in many instances as it relates to the regional input. So for example, if we attract foreign direct investment from overseas, and just using our local medicinal cannabis industry, I think it is approximately 35% stake that Barbadians can have in the industry. But what I would like to see as it relates to improving the funds that are injected into these respective projects from locally is to say, well, hey, our regional brothers and sisters will fund up to 60% of the investment, and 40% will come in from international. So, I mean, I would just like to see more investing coming from.
Okay, but let me tell you. Let me say something unpopular here, because the reality is, okay, if you want that, people have to do the work. You see, a lot of people, there is a test done where you ask someone, are you a better than average driver? Right? And about 90% of all people think they're better than average driver. And a lot of people think that their pet idea is a great idea. And the reason why their pet idea is not being produced is because these bad bankers are not lending to them, when their pet idea might be crap. So what we need to do is we need to have a system of prizes, of a prize giving based on how good the product is. And if we get people who win a prize based on that their product is really good, they haven't got any money, they haven't got a fantastic business model, they haven't developed a full marketing yet, but they've got a great product. They win the prize. The prize is a signal that this is a great product, gives them money to start developing their business model and their marketing, and then people will lend to them. But a lot of people think their idea is great, and they are waiting for people to come to them, and actually their idea is not so good.
Yeah.
And most in the rich countries are the biggest developed financial markets. Most businesses are not funded by bank loans. Most startups are not funded by bank loans. Startups are funded by the third credit card.
Yeah, well, I'm gonna agree with you, and I'm gonna say that, and this is not an endorsement for any specific organization, but I do know First Caribbean offers a situation, because they did a program at the University of the West Indies called the SEED program, the Student Entrepreneurial Empowerment and Development program. And at the end of the program, we were required to pitch our ideas, and First Caribbean sponsored the funding that you would have won if your program met the respective criteria and you outbeat the other entrepreneurs who had to present
a good idea.
their ideas. So that's excellent. I think that's a very excellent idea that you put forward, and a very practical. And First Caribbean has been a trailblazer in that regard. Yeah, so I mean, I think the ideas are there, and I would just go a bit further and say again, pulling on your points, Professor, that the middleman services, as it relates to brokerages and these other services and these hustler-oriented industries, I am a fan of those type of industries. Part of my
I can see
personal business model involves middleman. Yeah, part of my middleman services business involves middleman services as well. So I mean, it was very good to hear that coming out from you, and it lets me know that I am on an excellent trajectory as it relates to pitching development ideas for the region. So I mean, just thank you, sir, and I really appreciate it. But we're gonna wind down now. I just want to give thanks and praise for an excellent program tonight. I really enjoyed engaging with you. Our future governor is Central Bank, Misha, all the way from St. Kitts. I just want to thank you personally for agreeing to come on the show. Your perspective was a rather excellent one. You were a jewel amongst us men, and we want to express that gratitude, and we hope to have you on the show again. Kevin, your perspective is excellent. You're a credit unionist, and you put your case very well as it relates to the place that credit unions have in the future and the development of finance in Barbados and over the region. And I just want to thank you, Kevin, for agreeing to come on the show. Shane, our local international guest, thank you. Shane, it's always a pleasure to conversate with you, to chat with you. You always bring an excellent perspective, Shane, and you were an excellent addition to the panel. Professor, you provided the outlook for this discussion. You know, you set the structure, you set the tone, and it was excellent. We all were able to learn from you tonight. The panel used your points to build on greater points. And Professor, for a man of your caliber, I just want to express my heartfelt gratitude to you for agreeing to sit on the show tonight. It was very,
thank you.
And I really hope to have you back again at some point in time. So I want to thank VC3V in St. Vincent for carrying us live tonight. I really want to thank the audience for tuning in. We had great engagement coming in on the live. We've had Shanice McConney. I just want to thank you. Terriallo, she said great point, Shane. Thank you. We had David Waldron. Wanda Paris, who said it was a very educational show. Dolores Morgan, very informative show, and well done all. So again, thank you all of the viewers for tuning in. We'll be back again next week, Thursday, for Finance and Business Thursday. We also be having our regular programs and finance aspect every Thursday at 7:30. So thank you again. We're going to, yes, appreciate it. So good night, everyone.